Good evening and welcome to my recap and trade plan for next week. I'm going to zoom in here on the 5 minute, go over my trades for this week so far. On Monday, Apple, just like Apple, I wanted to see a continuation on this gap above. Now, if I zoom in here, you can see there was no continuation. Put in a long upper wick, tells me sellers immediately took control of the open. If there was going to be a break above, I would have been happy to trade above 281.90 versus these lows, 40 cents of risk in the SPY. Definitely would have been worth it for a gap and go trade. That did not materialize, so simply waited. We had a strong sell-off down here. Took one, excuse me, one entry in some 279 calls here, assuming this AEMA was going to be support. These were for Monday expirations, by the way. In at 60, out at 40. Just had to take my loss there. Middle of the day, had a very specific setup here. Started to add, or excuse me, started to buy the 277.5 calls here at 207 for Friday. Added at 202, added at 209 on the way up, and the target was the ADMA. Hit it perfectly and took me out at 234. Left a little bit on the table. As you can see, it did go quite a bit higher, but I was happy with that trade. Tuesday was nothing. Wednesday I didn't do anything. Thursday, on the gap down, we were breaking a significant level that had been tested twice, or created and then tested twice. So once that broke, I immediately got into the 275 puts here on the open at 60. Took half off as we approached the 21 EMA. Took some more off here at 96, right at the 21 EMA. Overall goal was for a target of the 200 SMA, which is this purple line down here. However, there was a strong bounce here, and I was watching the 2-minute chart, and I got my trail stop a little bit too close there, and it popped up and took me out at 107. So left some on the table there again, but overall it's still a decent trade. End of the day, Thursday, I did take some calls. Looked like we were going to bounce. As I zoom out here, this was a higher time frame trade. The 30-minute, you can see it looked like a bottom. Took some calls here at 53. They went to zero. Fortunately, I don't have the note on here, but I took some puts as well to kind of offset that. So that trade, that whole position ended up being a wash. Friday looked like we were going to have a similar move to what happened on Thursday, since we were breaking a already known support. Off of the open, didn't do anything immediately, waited for signal to go ahead and get short. So I took some 273 puts here on the breakdown below this inside bar, reduced here on the immediate drop at 95. On the breakdown, my goal was to capture that breakdown. Added into that same position at $1, which brought my average up, and that was a massive fake out. So I was stuck. Instead of bailing, which I probably should have, I added here at 80, added at 71, worked my average down to the mid to high 80s, and then trailed me out as price action broke above the opening range high. Now that trade, that position, it really irritated me. So from that point on, I just walked away, shut off Thinkorswim, and just went away. Into this week and what I'm looking at on Monday. I would love to see a move above this little trend line that has now developed to try and continue this trend that was initially established going up. But as I zoom back out, this kind of setup where we had a series of sell-offs and then one green bar that was unable to at least test the close of the prior day doesn't look too promising. So we'll see what happens. If price action opens up and starts to roll over, I'll probably go ahead and look for some puts to capitalize on a move down to the 50 SMA down here. This is the most ideal place I want to buy. I'll be looking for 265 calls about 4 weeks in the future now. This may change depending on how price action opens up on Monday. This red line is going to be a little bit higher, so maybe I'll go 267.5, maybe even 268. So we'll see what happens. Futures are now officially open, and they're slightly lower in relation to the close on Friday. So just keeping that on watch. Still have this bull flag up here that may play out. A lot of bull flags like to come back and retest the apex, which is this 265 area. Overall target I do still have is around 295. Now, before I change this ticker, on the monthly time frame, nothing really scary about the SPY yet. Just looks like a pullback, found support at lows, at least for now. So we'll see what happens with that. Now the weekly time frame is what looks scary to most people. It is a bearish outside bar, took out the highs and lows of last week. So that is worth noting, especially when you look in relation to what happened in October, November, and December. Anytime we had a huge red bar, we did have a green week the following week. only to have a massive crash. So that may scare some people out, may force the bears to be a little bit more aggressive. Hopefully they get caught on the wrong side, because it's my opinion, my theory, that the SPY is designed to appreciate historically, no matter what. So we'll see what happens going forward with that. On to the transportation ETF, which I kind of use as a leading indicator for what the overall market's going to do. And we put it in extremely high volume green hammer candle off the 50 SMA. So that is, in my opinion, a very, very bullish indication that we may be in a bullish reversal right at an extremely important technical level and prior support. The only question becomes, what kind of money was put to work here? Was this just a technical trade because it is near the 50 and a prior support? Or is there big money going into the market? Because you need big money to create trends such as this. Okay, so that's worth mentioning and noting right there. And I also want to touch back on the SPY and what happened. Now, if we do come back and that outside week does turn into bearish continuation all the way back down to lows, I would absolutely love for price action to come and test these lows again. What a lot of the news outlets and a lot of the investors and institutions are not talking about is why this V bottom happened. And I've said it in many of my videos recently. A lot of the market was trading at a deep, deep discount with extremely juicy dividends. Investing 101, when you have that kind of opportunity, you put your money to work. If you have funds on the sidelines, you're waiting for an opportunity to buy. This was that opportunity, anywhere from 232 and a half to 245. That 2-day period right there, sure, those were the short days of December, right around Christmas. There's a reason that that V bottom happened. That was an extremely rare buying opportunity for the market. So we'll see if that does come back and retest it. I guarantee there's going to be investors with funds waiting to buy at those levels again if the market comes down there. So that's my trade plan for next week and thoughts about the overall market. We'll see what happens on the open. Have a good evening and good luck tomorrow.